because when we trade bonds, and I'm here with my good friend, Donnie Schwartz. Donnie and I traded at a bond firm for 8 years together. This is exactly how the entire firm would trade bonds. And so right now, because my friend's here, we're going to talk about, Donnie, what would you say is your favorite trade on the yield curve?
My favorite trade on the yield curve is the knob, the ZNZB trade.
The ZNZB, exactly what we're looking at. And why do you like the knob?
The knob moves. It provides a lot of good trading opportunity.
You're right. So when you're looking at the yield curve, okay, so this is going to be the knob right in front of us. But when we talk about the yield curve, let's talk about the yield curve like this. And say you got a 2-year, and then you got a 5-year, you got a 10-year, you got a 30-year, and you have an ultra. Okay? All this stuff over here, guys, these are all going to be euro dollars. We're not talking about euro dollars on this video. But 2 years is going to be the ZT, ZF, ZN, ZB, and UB. Now, the way to trade these things is we don't really want to speculate or guess which way they're going, okay? Not really a high probability trade in my opinion. Let me get off that blue because it doesn't really present too good. What we want to do instead of guessing on direction, we want to trade the relationship between the two. Maybe we want to trade the relationship between these two. Maybe we want to do what we call a butterfly, the middle against the wings. And we'll go over that all Thursday live on the presentation. But today, what I want to go over is the knob and 30s against ultra. So we're going to be talking about the knob here and 30 ultra. And what this is going to be called is the bub. And these silly names are given straight from the Mercantile Exchange. So knob, bub, fob, all those things directly from the CME site. But let's talk about this trade specifically. Okay, so I hope this presents well. So what we're looking at here is the ZN against the ZB, and this is going to be the ZB against the UB. Now, if I look at the yield curve, back to our yield curve example, and we talked about 10s, 30s, UB. Again, we're trading the difference between them. So the ZNZB has a difference of 18 years. The ZBUB has a difference of 18 years as well, because what these contracts really are, the ZN, it's called the 10-year futures contract, but it's really a 7-year. The ZB is a lot closer to an 18-year than a 30-year. That UB is going to be closer to the 30-year. So we could trade these things together, right? Because there's a very, very strong correlation between that 10-year and 30-year, between the 30-year and ultra. So what we do is we want to look for breakdowns in the market. That's really what we're doing as traders, waiting for those breakdowns to happen. And so what you can see here is July 24th, ZBUB was very offered, very low relative to the knob. And if we look at the knob here, the knob was considerably higher, right? So ZBUB, look how much lower it is compared to the knob relative to one another. So as soon as that ZBUB was obviously very inexpensive compared to the knob was already kind of mid-range. If we go back to this chart and we look at 7.9 right here, you can see ZBUB is way, way under kind of its average range over that period. So it was clear that the ZBUB was inexpensive relative to the knob. Okay, and this will get into a few more advanced techniques. But what we're doing is we're really doing a butterfly between the ZB against the ZN and against the UB.